All right. Welcome, guys. Oh, hello. Hello, everyone. Whoa. We haven't even started yet, but we have 5 likes here. Awesome. Welcome, guys. Welcome. Feels like it's been a while, but hopefully you guys can enjoy tonight's stream. All right, let's lower this music down. All right, so let's talk about what we want to talk about tonight. So, if you guys have not read the title, we're going to talk about whether or not we have another leg up higher in the market. So, whether or not we have room to make another move higher, especially as we head into the inflation report tomorrow, right? So we have CPI report and PPI report coming out tomorrow and Thursday, respectively, right? And then next week we have yet another large catalyst, which is going to be the FOMC meeting for the month of June. So this upcoming inflation report is going to be pretty critical because the Fed members are going to be watching what the reports say and what the numbers are, the data, and they're most likely going to quote unquote price it into their potential monetary policy changes or actions that they will have and talk about in or during the FOMC meetings next week. Okay, so these inflation reports that are usually a few weeks or a month before a major FOMC meeting are pretty important. So obviously every inflation report is important. Yeah, we all know that, but but when they're so close in proximity to the FOMC meetings themselves, they need to be watched a lot more closely, because we need to understand how the Federal Reserve is going to react and how they will be focusing on the current federal funds rate or the benchmark interest rate, right? So first of all, let's do some TA here. All right. Obviously, amazing breakout from this Momo bull flag on the weekly time frame on the S&P 500. I made this pretty clear 2 weeks ago. Okay, now including this week, obviously, this is just 2 weeks ago, and I told you guys that there's most likely a good chance that we would just break out of this as people continue to be taken out from the shorts, because people are continuously trying to short for a move lower, but we continue to make higher highs and higher lows. Now, obviously, I've also mentioned that due to seasonal patterns and all these macro factors that will play into the markets eventually, we should be seeing some good descending consolidation that should occur as we head into quarter 3. Now here's the thing though, right? Here's the thing. As I've been saying, right, every single dip will be bought up very, very quickly, right? So every shallow dip, every shallow move to the downside will be bought up very, very quickly. I've been stating this for the last month and a half, and that's exactly what we've been getting, right? Now, obviously, about 2 weeks ago as well, literally 2 weeks ago, I talked about this gap up area as well, right? If you guys remember this little area here, not really little from the size, but between the weeks of May 5th and May 12th, we have a very nice gap up here, and this gap up area is going to be very, very important if we decide to have that descending consolidation that I've been looking for heading into quarter 3, or most likely during quarter 3, and most likely a higher probable chance that it's going to be during quarter 3, where we see this gap fill occurring for this gap up area. And that could be months down the line, but again, you guys cannot forget about these this gap up area between these 2 weeks in May. Okay, so the first 2 weeks of May, essentially. All right, now heading to tomorrow, right? Inflation has been coming down. Inflation expectations have been going down as well, right? And consumer expectations for a recession has come down as well. However, they're still at elevated levels, and so I'm also watching out for that as well, for the expectations for inflation and consumer expectations of the overall economy and consumer confidence, right? Because those are kind of not just kind of, but they do influence the overall data for inflation and for the overall economy as well, and other economic measurements and reports. So we need to really watch out for how inflation reports tomorrow, especially from the CPI report and obviously from the PPI report as well. But everyone will have their eyes on the CPI report, and it's going to be especially important for me to see how we react, whether we come in line with expectations or if we decide to beat expectations by moving lower, right? But obviously, based on the last month, even just the past 2 months, we have seen the short-term effects so far from the current tariffs that have been in place, and the current deficit that's going on, the trade deficit, right? And the fact that we're seeing a lot less imports now, right? A dramatic decrease in imports. Let me actually look at the numbers. Yeah, so there was a significant decline in April and May, where we saw a decline in imports, right? And I think in April, imports fell by 16.3% to 351 billion, which is the biggest monthly drop on record. Okay, and then in May, we just continued to see that downtrend in import slowdown, right? As I believe it says here, U.S. ocean container imports declined significantly, right? And seaborne imports from China to the U.S. dropped 28.5% YOY, which is the sharpest decline since the pandemic, right? So, it just seems like we're not seeing, again, just overall good status from trade, right? From overall trade, in or out from the US. So this is definitely going to be something to be watching out for as we head into the next couple of months. I would say next 2 to 3 months, including this month, due to the current quote-unquote trade talks that are occurring right now, right? So in my mind, when it comes to inflation tomorrow, okay, so let me actually make sure I have the right numbers here for the CPI report, okay? So tomorrow for the headline CPI year over year, right? The previous one was 2.3%, and now the forecast is at 2.4%. So it's a slight creep up higher of 0.1% for headline inflation. Now, what's also interesting about this is that it's not just the headline CPI that is looking to have a nice small creep up higher from the previous data, but it's also the core CPI year over year that is looking to have a nice small pop up higher. Okay, and that is the previous month in April was 2.8% for core CPI year over year, but now there's an expectation tomorrow for a 2.9% increase for the core CPI year over year. So again, things are looking slightly unstable, as in it looks like we're not trying to uphold that 2% range for CPI, because again, what is the target range? Well, what is the target percentage? Actually, they don't really have a range. The target percentage for inflation, well, it's 2%, right, from the Federal Reserve. So that is something to be watching out for, because if we lose this 2% again, especially for core CPI year over year, well, it's not good, right? And most likely, we're going to be seeing talks of stagflation coming in once again, right? And if you guys want, again, a textbook definition of stagflation, right? So let me just look it up right here. So stagflation is an economic situation where inflation and unemployment are both high while economic growth is slow or stagnant, right? Hence stagflation, right? So please remember that, right? So we have high inflation, high unemployment, and simultaneously we don't really see a significant growth in the economy, or rather a slowdown in economic growth, right? And possibly even a contraction in economic growth, right? So we're kind of in this lull here in economic growth, while inflation stubbornly stays high, and unemployment can stay consistently high, right? And we've seen jobless claims creeping up higher too, which again isn't good. And obviously the unemployment rate itself has been sitting around, I think, like 4% to 4.2%, if I remember. Let me make sure I have that correct. Yeah, 4.2%, right? So it's been ranging from 4% to 4.2% since May of 2024, right? So this is obviously not it's not bad at all, but obviously we consider to have quote unquote no unemployment, right, when the percentage is at 3.5% or even under. So this pop back up higher to 4% obviously isn't a vote of confidence for unemployment, right? Because we want to be seeing low unemployment, but again, there could be talks of stagflation coming back with the Federal Reserve for next week if we do see this expected number being beaten tomorrow, especially even if we do come in line with expectations, because again, headline CPI, they expect 2.4%, which is again is a 0.1% increase, and core CPI year over year to be 2.9%, which is again another 0.1% increase from the actual value that we saw in the month of April. So even if you come in line with expectations, that is still going to be a slight increase in the core and headline CPI year over year. So as long as we, especially for core CPI, the most ideal scenario for us will be that we see either inline expectation. Well, if I'm going for the ideal, I would say a slight move below the expected value. So if we come to, let's say, 2.8%. So let me actually bring out the numbers here for you guys to take a look at this these values. So the core CPI, right? I'm talking about this right here, year over year. Okay. Now, obviously, the core CPI here for the month of May is going to be very important here. But so the core CPI year over year, right? If you come at, let's say 2.8%, so basically unchanged from April, that will be a confidence that inflation is not trying to rise higher even after the implementation of tariffs, right? And the current short-term negative implications that they're having so far on the overall economy. So, that's kind of the ideal scenario, which will potentially give us that leg up higher for the overall markets tomorrow. And obviously, you know, from a technical perspective now, if you were to follow through with that ideal scenario that I just described for the core CPI YOY, we could be seeing a very nice retest of on the SPY, right? On SPY S&P 500 ETF, 605, or at the minimum, or actually maximum. So 605 will be minimum, and maximum 608.50, right? This is the previous all-time high resistance level. Well, the lower range level resistance level, and overall resistance will be at 611, right? So this is the range, the all-time high supply area that we need to be looking out for, because again, the current all-time high price print is sitting at 613.23, but we already have established resistance levels at this current all-time high area between 608.50 to 611, right? So this is going to be pretty interesting because, well, to say the least, because you know, if we do decide to see that an ideal scenario playing out where we see both, well, most importantly, the core CPI year over year coming in line, or ideally not changed, so unchanged from the previous read of 2.8% and 0.2%, right? So again, this is the core CPI year over year, and this is the core CPI for the month of May, right? As long as we see an unchanged core CPI, I think we're good to go for a nice run up higher. Now, why do I think that? Why do I think even if we do come either in line or ideally unchanged from the previous month's inflation report, why do I think that we could be seeing another run up higher? Well, because again, what has the entire crowd of people that are involved in the markets have been feeling so far for the past couple of weeks and months, for the past 2 months, I should say? FOMO, right? So there's been a lot of chasing to the upside, and people like to buy conventionally at higher prices so that they can sell at higher prices, right, from where they bought. And so this is the conventional thinking, right, where we want to be buying higher and selling even higher, right? And this is what's currently driving the markets and currently taking out shorts, right? We're continuously seeing very, very quick and shallow dips, as I've been stating for the past 2 months, ever since we had the nice April low bottom, right? And again, we were looking for the April bottom as well. If you guys remember, if you guys are part of the CFO Swing and Watch report, we're absolutely on point with the complete sell-off in preparing for a sell-off actually from January to February, and looking for a bottom in early April. So from that point onward, we were expecting to see very, very quick and shallow pullbacks that'll be bought up very, very quickly, and ultimately taking out any short-term shorts. And that's exactly what we've been seeing this week and last week as well, as we broke out of this very nice weekly Momo bull flag that I outlined 2 weeks ago, right? I mean, this is literally play by play that I've shown you guys here with the technical analysis. I mean, I showed you guys this when we were, you know, looking like this, right? I was telling you guys that we could possibly form a very nice tight, high and tight Momo or momentum filled bull flag on the weekly time frame, and exactly what we got, right? So, you know, if you guys have been following the technical analysis here, well, good on you, right? Okay, so tomorrow, so what's the game plan now, right? So everything kind of comes down to how the inflation report or the CPI report comes out, and obviously how the PPI report comes out as well on Thursday. But again, most of the price will be, well, the price action to react on the CPI report will be baked into the price action into Thursday's price action, where the PPI report comes out. So you know, tomorrow, if we do see a massive gap up, you know, let's say even a 3% or even a 5% gap up higher, right? So again, if you guys want to see what that looks like, since we ended up at 603 today, right? Even if it's just a 3% move up higher, right? That's a new all-time high, right? And again, why am I saying 3 to 5%? Well, because again, what is the current trend right now for the markets? FOMO buying, right? And how do we know this one? Everything that I've just explained to you guys so far, right? And especially just on a week like this on May, right? So we closed on this weekly candlestick around here, and we opened up 3% higher, right? I mean, this is not that unbelievable that we won't be seeing this, right? But again, obviously this could be most likely an ideal scenario. So if I'm being realistic, let's be realistic, right? If you're being realistic, again, we should most likely be seeing at least a retest of 608.50, which is the lower range level of resistance on the current all-time high supply area that we have from 608.50 to 611. Does that make sense, guys? Yes. All right. I see you guys' reactions there. Awesome. Okay. So, obviously, this is all predicated on the fact that, well, my ideal scenario plays out. All right. But obviously, we don't know exactly what will happen tomorrow, especially with such a binary event when it comes to inflation reports. Because even if you come in line, right, that's still in line with expectation that it will be an increase from April's reading for CPI. So we really need to see what the numbers come out tomorrow pre-market. And again, the numbers come out 5:30 a.m. Pacific Standard Time or 8:30 a.m. Eastern Standard Time. Right, so basically an hour before the market open. So to me, this is something that I'll be looking out for tomorrow. And again, you guys should be looking at it from that perspective, right? Because again, even if you, again, just as a reminder again, I'll say this one last time, even if we come in line, right, that is an increase from the previous month's reading, right? For all of the current CPI data points that we'll be looking at, the most important ones, core CPI and core CPI year over year, right? So ideally, again, we don't see an increase. So again, an increase as in an inline reading of the current expectations, because that'll be a 0.1% increase for both the core CPI readings here, right? And ideally, I would like to see an unchanged core CPI reading where we have 0.2% for the month of May and 2.8% for core CPI year over year, right? So if that does occur, that is where I'm going to be expecting a major gap up higher as people scramble to buy into the markets, because they're going to be thinking that, hey, it seems like inflation hasn't been affected too much from the month of April and from the month of May now, since these tariffs have been implemented, and we're actually seeing the current negative implications that we're seeing on trade, right, for exports and imports across global major global trades, right, global trade markets. So that'll bring a bit more voter confidence back, and people will be scrambling to try to get back into the markets. And again, that overall conventional thinking will still be the baseline thinking as well for most people, as people will say, okay, I can buy at this high point now because I just can sell higher later on, right? So buy high, sell higher, right? Well, sell even higher, right? So as long as we can at least go through and follow through with that ideal scenario of having that unchanged actual data points for the core CPI and core CPI year over year, that's where we can see a potential gap up higher to at least 608.50 or at least a retest the current all-time high price print sitting at $613.23. Now, what should come after that? All right, because again, we're trying to figure out if this could be the potential last leg up higher or the last run up higher in the overall market. Well, if the CPI report comes out and we have the ideal scenario where we have an unchanged values for the actual values compared to the expected, and from the previous readings of CPI, inflation readings for the month of April, well then likely have a potential sell-off event, right, where we see very, very late FOMO buyers coming in pre-market and into the market open. And if you do see the prices hanging around 608.50, or at least within a range between 608.50 to 611, there's a good chance that we can have a nice rejection at this supply. Again, this is a supply area, and there's going to be a lot of short-term technical traders looking at a potential double top on the overall markets, right? And this is what we'd like to see. Well, this is what we tend to see whenever we're at a previous all-time high area, especially when it comes to an all-time high supply area between, again, our current supply area or all-time high supply area sits at 608.50 to 611, right? So, hey, what's up, guys? Welcome in, welcome in. Make sure you guys smash that like button down below. Hey, I see you guys' reactions. For anyone who is just coming in now, you guys have missed out on the bulk, unfortunately, of what I've been talking about tonight. But then again, no worries. You guys can just come back to the replay, which I highly recommend you guys to do before market open tomorrow, since I really talk about what I expect to see from the inflation report and how we expect to play out the overall markets if we do see a massive gap up tomorrow. And again, just the gap up to the current all-time high supply area from 608.50 to 611, right? And so again, back to what I was saying here. So as technical short-term traders, we'll be looking for that potential double top, and this occurs all the time when we have a crash to the downside and a very fast, quick recovery move back to the upside. And once we start to approach the previous all-time high levels like 608.50 and 611, most people start to look out for a double top, and we'll see that kind of swift rejection and move down, kind of a similar price action maybe as we saw here on the weekly candlestick that we saw back in February 18th, but we also had that current all-time high price print sitting at 613.23, right? We might be seeing a similar price action or weekly candlestick like this by the end of the week. But again, this is just speculation at this point now, but just based on the previous historical action of when we decide to come back up higher to retest a previous all-time high resistance area, we do tend to see a lot of people looking out for the double top, which means there's also going to be a lot of new shorts trying to come in around this 608.50 to 611 area. So there's going to be a lot of profit taking occurring, along with a resurgence of shorts trying to move the markets back down, which will eventually most likely will allow the markets to go back down, right? And again, that's not bad. Why? Because we're expecting to see some volatile oscillations that will lead into a consolidation phase for the markets as we head into Q3. And if you guys didn't know about that, and the reason why I'm saying that is that, well, you guys aren't part of the CFO Swing Watch report, and I've been talking about this for the last 2.5 weeks, right? And as we head closer into Q3 for this year, okay? So again, the markets will most likely be moving based on the perception of how the Federal Reserve will be acting in the next FOMC meeting, which is going to be next week. So we have to be prepared for that, and the markets will be again moving a perception of how the future will look like on what the Federal Reserve will say and react off of this inflation CPI report tomorrow and the PPI report on Thursday. Does everyone understand that? Awesome, I see you guys' reactions there. Great. Thank you guys, thank you. Okay, so that's pretty much it for tonight, guys. I mean, I don't really want to go down the path of T8 so far, because again, that could be completely invalidated by tomorrow morning pre-market, not even just that market open, because depending on how the market reacts to CPI, and just again, based on what I've told you guys on historical trends, and based on kind of the realistic and the ideal scenarios that we could be looking out for the CPI report tomorrow. Everything can change in a blink of an eye tomorrow, and it seems like even overnight market futures aren't really doing much, which is expected, right? If you take a look on, well, here it is, right? Okay, and it seems like we're most likely just consolidating the move that we had today. I mean, if you guys have been following me, we reached a very nice target today at 602.50, and we closed today at 603, 603.08. So pretty good target there that we reached today, 602.50. And we're very, very close to 605, which is my next major target. But again, the ultimate target will be 608.50, right? As you saw on that weekly time frame. Okay, or I guess I should say 608, but I would say 608.50 is mostly a better level. I think I accidentally moved this earlier. Right there, right? So, you know, guys, it's really prudent for you guys to understand what's going on with the report tomorrow for inflation. It's not just what the data is, but how the Federal Reserve will be reacting to that report next week during their FOMC meeting, which will be held from I believe June 17th through 18th, if I remember. Yeah, June 17th through 18th. And obviously the Wednesday of next week will be when the rate decision comes out, which are most likely going to be another pause, unfortunately. But based on how the report comes out tomorrow for CPI, from the CPI report and the PPI report on Thursday, we're going to be seeing what they will say and what the Federal Reserve members, especially that infamous dot plot, right, regarding on what each important Federal Reserve members will be thinking about where the benchmark interest rate or the federal funds rate will be in the next couple of months or even the next couple of years, right, into 2026 and 2027, right? So this is going to be interesting because, again, the Federal Reserve the entirety of Federal Reserve, right, not just Federal Reserve Chairman Jerome Powell, but the entire Federal Reserve is expecting to see inflation getting closer and staying closer. That's the most important part, staying closer to that 2% target, right? It's not just heading to 2%, but staying near that 2% target. And again, stagflation talks can reignite if we do see even just an inline expectations, inline actual, data points coming in tomorrow. Because again, what are the current expectations right now? A 0.1% increase for both core CPI for the month of May and core CPI year over year. So even if you come in line with the expectations, that is still an increased value from April's reading. So, you know, the markets will be pricing in that future perception on what the Federal Reserve might do and act on the current federal funds rate. And I'll be most likely also tracking bond yields tomorrow morning, pre-market as well, because they will be very, very important. They will be reacting. And so far today, before I leave you guys off for tonight, TLT, right, the 20+ year Treasury bond ETF, not too good of an action today, although the last 2 weeks we've been very volatile, obviously because we've been right back down to a very critical multi-year level at $85. I mean, again, this $85 level has been a huge level since 2023. I talked about this in 2023, if you guys remember, and obviously that we had that massive reversal at 85 in 2023, and obviously that massive reversal and official bottom in 2023 from October to November, if you guys remember. And I believe in Q3 of 2023 is when I also made that accurate, on-point prediction that we'll be seeing our very first rate cut, our first official rate cut and pivot of the monetary policy from the Federal Reserve in Q3 of 2024. And that's exactly what we got in September of 2024. Right? So, again, TLT, I'll be also looking at the shorter maturity Treasury bond ETFs like IEF, which is the 7 to 10 year Treasury bond ETF, and IEI, the 3 to 7 year Treasury bond ETF. Okay, so the shorter term maturity Treasury bond ETFs aren't looking too good today, which is again not too good in my perspective. Even the bond yields, even the 30-year yield, I didn't really like it, obviously, just based on today's action alone, right? And if you can look at the 10-year as well, TNX, so not that good heading into tomorrow's inflation report. But again, it's not just the bond yields that we need to be looking at, but some other groups in the equity market, right? On the risk-on assets, like solar names have been doing very well today, right? If you take a look at the actual solar ETF, we've been moving up higher with higher highs, and we actually made a higher high today and a higher low. And individual solar stocks like SCDG, Solar Edge had a massive run up higher. NXT is looking very good today too. First Solar, not bad of a close here. Run, okay. Array, all right. Okay, so EMPH, Enphase, even GNRC, Generac. Oops. Okay, so all of these solar names had a very nice move today, heading into CPI, which is again important for these solar stocks because they're so heavily influenced by the current benchmark interest rate, right? And so, but not just this group alone, this solar group alone, but we have an entire sector, home builders, right? Reacting very, very nicely to the upside today for some reason, and it seems like home builders are looking and ready to have a nice reversal to the upside, and we had that nice KBH to be looking out for, the KB Home, right? This is a major home builder here that looks very, very good and set to run up higher, over $55. And if you guys haven't watched that video yet, the official CFO Swing Watch Report technical analysis video on KBH, please take a look at my channel. You guys will see the most recently uploaded videos, and you'll see that video, I think, like from 2 weeks ago. Okay, so let me make sure that is the case. Yeah. Okay, so that's 2 weeks ago on the live tab, right? The live videos. Okay, so make sure you guys take a look at that. All right, we're seeing home builders reacting very well today, right? Like the Toll Brothers here, right? TOL, even oops, yeah, that's the ticker. There you go. First source builders, right? Or builders first source, right? So some very, very nice movers on the overall home builders sector, which is interesting to me. As we know, if you guys didn't know, well, home builders are also heavily influenced by the current benchmark interest rate or the federal funds rate. Again, those are synonymous names. And it's kind of a nice vote of confidence as well heading into inflation reports for CPI and PPI on Wednesday and Thursday. So, hey, who knows? All right, the markets currently right now are giving mixed signals as we head into inflation. And I think inflation reports are also going to be giving us mixed reactions as well. So, it is what it is. As long as we see the ideal scenario to gap up to 608.50, and again, that is, I believe that's like over 1% or nearly a percent. Yeah, so around 90% here, not 90%, 0.90% from today's close to 608.50. That is a pretty solid move, right? And I would be looking to take some profits on some long-term positions that I've had since April lows, right? So where we grabbed and dollar cost averaged and obviously take some profits to seal in some profits, since I am not looking to hold into possible volatile oscillations. And again, I've given a reason why we could be seeing volatile oscillations for a consolidation phase as we head into Q3 in last week's report. So if you guys want to read that, and if you guys aren't a part of the CFO Swing Watch report, I highly recommend you guys to join and at least see what it's about, right? We've been seeing a surge in demand and a surge in people wanting to join the CFO Swing Watch report as of late, and people are also joining. You guys have the opportunity to join the private CFO Discord as well. But again, just as a reminder, if you guys become a reader of the CFO Swing Watch report, you guys have automatic access to the private CFO Discord. So if you guys become a member of the report, please message me if you guys want to become a private member of the CFO Discord chat room, because there's a lot of readers out there who aren't in the CFO Discord. But hey, you guys have the opportunity if you guys want to kind of get that day by day, week by week playthrough of the CFO Swing Watch report and kind of the day-to-day updates that I usually provide on the overall markets as well. Okay, so again, if you guys want to join, please use the link down below. You guys should see it where it says CFO Swing Watch report. But then again, if you guys have any questions, please ask me on Instagram at chartsfocus1. That is my handle, right? At chartsfocus1. But again, you guys can find all the details in my website for the newsletter, the CFO Swing Watch report, in the link provided down below. I believe it is the second link down below in the description box. So please go ahead and take a look down below. And yeah, again, I've been seeing a lot of questions coming towards me. I've been seeing a lot of interest, a lot of people looking to join the report. And again, for anyone who's interested in joining the report, there's an opportunity for you guys to join the private CFO Discord channel, or the chat room if you guys like to use chat room or channel, whatever it is. And yeah, please message me if you guys have any questions regarding the report or anything else through Instagram, right? And again, my handle for Instagram is @chartsfocus1, just like this channel on YouTube. Alrighty, that is it for tonight, guys. I have nothing else to talk about. I'm not gonna be too focused on the technical analysis because again, it could be completely negated by tomorrow pre-market, depending on how the market reacts to the actual data that comes out for inflation. So good luck tomorrow, guys. We'll most likely potentially be seeing an increase in the volatility index for the S&P 500. We had a nice pop-up higher today as well. And depending on how inflation reports come out for CPI and PPI, we'll be seeing how the volatility index moves, right? All right. Well, that is it for tonight, guys. Thank you guys so much for joining me. Thank you guys so much for staying with me until the end of the stream. And thank you guys so much for always supporting the channel by hitting that like button down below. But most importantly, hitting that subscribe button as well. And on top of that, as a cherry on top, hitting that notification bell. All right. So have a great rest of your night. And I'll see you guys next week on Tuesday at the same time at 7:30 p.m. Pacific Standard Time or 10:30 p.m. Eastern Standard Time. Good night.